All right, welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. That's my partner, Matthew Gizzi. This video is specifically for our investors that purchased in 2021. We've got some important information to share in terms of where the market is, in terms of pricing, and of course, taking a look at those interest rates. And it's important to get ahead of any challenges you may be foreseeing for you or yourself. And this is the headwinds that we're talking about so that you can get ahead of it. So talk to me a little bit about the changes that we're seeing, of course, in terms of our median price. And what I want you to look at here is we're talking about our forecasts for 2026 in comparison to our 2021 median that we have here as our baseline.
So the thing that we need to highlight is if we forecast out, if 2026 follows the same trend as what we've seen 2023, 2024, 2025. Actually, if you can go to that chart. So this is the trend. We're trending to the downside. It's very likely that we continue into 2026 just because of all the economic factors that we're seeing. Interest rates are sticky, the whole US Canada trade war. So it is very possible
And
that
we
we
still have high
continue.
months of inventory. So we're going to
Yeah.
see that downward pressure. That's a key indicator that we're still looking at as to why this isn't going to turn around next month or the month after.
So if we go back to our original chart there, this chart is basically forecasting that the orange line is if we continue the exact same trend. The green line is if things recover slightly. And then the blue line is if things get worse. If way more inventory hits the market, if the relationship between Canada and the US continues to deteriorate, what could potentially happen. So let's just look at the trend because I think the trend is likely to keep up. So if you purchased in 2021 in January, February, your property is still going to be up in value compared to where you purchased it before. Where it starts to get a little sticky from March until June, you're still just below that line, but it's anyone that purchased from June up until December. If the trend remains, October, you're down 14%, November, 21%, December, 24%.
And
On the,
Matt, I want to jump in real quick, just so people are
yeah,
very clear on this. These percentages that we're talking about down from the 2021 numbers. You got to remember, we were escalating in 2021, specifically that second half of the year. We were really seeing
yeah.
prices go up. So what we want to know is if you're refinancing or just in general in this time frame next year, this is how much you may be down from what that 2021 pricing as it was going up. And we are now continuing to trend downwards a little bit.
If you're renewing it, I don't believe it matters. You'd have to talk to a mortgage agent on that. If you're below what you have in equity in the property, are they going to call you out on it? I don't know. But if you were planning on potentially refinancing the property for any reason, I don't think unless you went in all cash, if you went 20% down or less, that equity that you had in the property is potentially going to be gone if we continue on the same trend. Even if we have a mild recovery, by the end of the year, you're still down 21%. But that's depending on when you bought. If you bought in August, these are your numbers. If you bought in September, these are your numbers. So what we're trying to say here is if you're a landlord, if you bought an investment property and you bought it in 2021 in the second half, and you were thinking of potentially getting out of it, it might be best to do it right now. Because if this trend continues, at least you can get out of it right now with at least a little bit, or at least minimize the damage. Because it's going to be near the end of the year where those prices are really going to be down from where you purchased. Your interest rates when you renew are going to be extremely a lot higher than they were when you got them, number one. And then number two, I just added another chart. If you can go to the next chart, Dylan, we're starting to see rents roll over as well. Now, if you have a higher end property, they've held up a little bit better. But if you have a median type property, the average rental unit, these have really come down from some of the peaks that we saw in 2023, 2024. And they're starting to work their way back down to where they were potentially when you purchased the property back in 2021. So those are huge factors. And then if we go to our last chart and jump in there, Dylan, if I'm just going too quick on, sometimes this mouth moves faster than I want it to, but this is the first time in a very long time that in a 5-year period, you haven't been able to refinance at a lower rate or at a higher price,
And higher equity in your home,
higher
right?
equity in the
Yeah.
property. This is the first time in a very long time that both of those are not true. You're refinancing into a higher interest rate, and you're refinancing potentially into a lower price than what you paid for the property. Now, we don't know how long this is going to go on for. We do know that way more rental demand is going to be hitting the market. Population isn't going to recover until potentially 2027. The US is really that kind of key thing that if it can be fixed sooner than later, we might get a lot more confidence in the market and might bring people back to the market to at least put a floor on where we're seeing prices go down. But if we're looking at the data today, we have to assume that this trend will continue till it doesn't. And this chart is basically showing you that during these 5 year periods, except for in 2010, 2012, and 2004 to 2006, yes, you did refinance into a higher rate, but the property's value was a lot more than when you first got into it. So at least you had that equity in the property that if you couldn't do the payments, you could at least sell and make some money off of it. So this video really is for anyone that's potentially struggling as a landlord, that's losing equity every month because the rents aren't covering it. And it's very possible that come renewal time, if you do need to refinance, maybe it's better you start to look to exit now rather than in the second half of 2026.
And so, to help simplify this for you guys and the key people that we're talking to, Matt's talking about the interest rates. So, if you were somebody that bought in that 2020 time span, this is where your interest rates were in general. This is where they're going to be now, where we're refinancing. We've gone lateral here. We've got better charts for this. If you watch our whole video, please do. It's important. So that's going to be the big sticker shock as a refi comes on. Now, when we come back to this slide, the reason why we see these downward trends as we're comparing to our 2021 median price, where we're seeing this big drop off in the second half of the year, well, that's because when we come back and we take a look at median price for 2021, look at how it shoots up in that second half of the year. So if you were purchasing in that time frame, these are the prices that you purchased at. If you're needing to refinance, here's the value of the home today. There's going to be a challenge there in terms of equity. And when we take a look over here, we know that we're bumping up in terms of our rate. So we've got two challenges that Matt's mentioning that we haven't seen come together at the same time before. We're refinancing at higher rates, and we don't have the equity that we've typically seen during those times. So what's important, if you're one of those people, let's have the discussion today, because while we're over here only down, maybe even in our bearish concerns, we're down 5%. We might even be above the trend line if we're looking at mild recovery in 2026. But most likely, following the trend, you're still going to be in the negative. But if you don't do it before mid-year, this trend really drops off if you're one of those people that needs to refi and purchased in 2021.
Yeah. So reach out to Dylan and I if you are in this cohort to at least start a conversation,
Yep.
to potentially get put in touch with a mortgage broker who could potentially help you, or even ourselves to at least discuss the data that's at our disposal right now, so that at least we can paint the picture for you what it's going to look like, and you can decide whether or not it's something you can still continue on with, or is it something that you need to move off with from now.
Yep.
And you do want to do it at the busiest time of the year, which is typically the spring market.
Yes. And so reach out today. The best thing you can have for yourself is a plan. Know your options, pick the one that makes the most sense, and mitigate challenges before they pop up. Thank you so much for watching. We look forward to seeing you in our next video.